Thanks for joining us. I'm Marlon Bowling with you here on the Market Day Report as we come down the home stretch of a very short trading day here on Friday. Of course, the markets will be closing up here in mere moments. And here to talk about what the trade has been doing here on a Friday, we turn to Scott Gecas of Longleaf Trading. He is there at the edge of a CME Group trading floor in Chicago. And he joins us right now. Scott, good to have you back with us. Hope you had a good day yesterday.
Oh, of course. Thank you. I hope everyone's holiday as well.
Well, thank you very much. Let's take a look at the grain trade. You know, last time I checked here, things were kind of sliding away a little bit. I believe we have new contract lows on the wheat. Is that right?
Yeah, new contract lows on the wheat. You know, just the grains across the board are relatively weak overall. You know, coming in this morning, we seen just a little bit modest, open, a sideways trade. And just, as I was walking up, you seen everything just starting to slide lower and lower and lower. So let's see how it ends up.
Yeah, let's take a closer look here and just see where we currently stand. As you mentioned, we had the export sales this morning, and they did not really offer anything very supportive to the major grains. Corn was 1.1 million tons, about as expected, maybe even a little on the lower end. December corn now down 5.5. So we're trading at 339 3/4. That's on the low of the day here. We're about 6 cents now off our earlier high. And July down 4 at 369 1/4. Just one tick from its low of the day. About a nickel off of its high from early morning hours. Now let's take a look here at the soybean trade here. On the soybeans, we have the January contract 5.5 lower at 991 3/4. So we're within a penny of our low of the day here. We did post a high earlier today of 999 3/4. Got within one tick of $10. Just could not quite ring the bell, and then it backed away from it. Right now, July down 5 1/4 at 1021. And let's look at the wheat trade here on the wheat market in Chicago. Boy, as Scott mentioned, new contract lows here. December down 9 at 413 3/4 has come up about a penny off of its earlier low this morning. On the Kansas City wheat market here, we have the nearby December contract still down 8.5. We're at 412.5. That's a penny and a half off of its new contract low that it posted a little bit ago. And July KC wheat down 8.5 cents at 461. That's for the new crop month of next year. And if you look at the Minneapolis spring wheat trade today, we have December down 8.5 at 618 1/4. Just one tick from its low of the session, and July on its low at 642 would be down 6 3/4 cents. Cotton market today has that December contract still roaring ahead. It's up 160 points at 72.34 cents per pound. That's on the high of the day. However, you look at the March, and that is 72 higher at 71.86. Remember, that was first notice day for the December cotton, so that is trading kind of independently from all the rest. Still higher all across the board. Scott, your thoughts here on this corn market starting to drift here toward the lower end of the trading range today. That has to be a little bit concerning to technicians when they look at that kind of market action like that.
Yeah, I mean, we definitely broke a pretty major support. So if we can't close above, I would say 339 or so, you're going to continue to see some selling pressure coming in. The one thing that does stand out with the corn market is, the Chinese imports were up almost 400% versus last year, and that's not affecting the prices at all. So you're seeing some heavy selling pressure today across the board.
Any idea, you mentioned that we're at new contract lows in the wheat. How far away from contract lows are we on the corn? Do you know?
We're not that far off the contract lows, but, it's still, we still have a ways to get to the contract lows with the corn.
We do.
So it's not just there yet, but yeah.
All right, just a stone's throw away. So, all right, something to keep an eye on. A lot of times corn and wheat will kind of mirror each other to an extent in what they do. Scott, if you don't mind, I'll bring you back here in a moment, and we're going to talk about our livestock trade. We have kind of a divergent trade shaping up there on a Friday. We'll talk about it when we come back. West Texas crude oil still 83 cents higher per barrel right now, and the U.S. dollar value on the index still down 440 points on the day. And yet even that is not enough to prop up the grain markets here today. Here to talk about the markets, we go to Scott Gecas in Chicago. He joins us right now. And Scott, thanks for joining us here on the program. As we talk about the livestock trade here, I want to get your thoughts on what we're seeing here in the cattle market. We have live cattle under pressure, but the feeders have had a little bit of strength here today. Can you explain why that would be?
Yeah, I think it's just the cash spread widening out a little bit. You know, the cattle's been in a steep downtrend. You know, it's getting to oversold territory. You know, Tuesday and Wednesday, you've seen some of the speculators increasing their, the long contracts, trying to, pick a bottom here. But, we'll see how this all plays out. It's not really working out for those speculators today.
Over the course of this past week, of course, the market has been sliding on the cattle here for a few weeks. And it looked like it was really, really trying to put in at least a temporary low and bounce off of that. Do you consider the feeder cattle market succeeded in that while the live cattle did not? Or how do you look at that now on the chart?
Yeah, I mean, as far as that goes, I think the divergence is just a temporary divergence. You're going to see them come back in a line, and, especially if you see the cattle continue to start moving lower. So we'll see where the market ends up closing today. But if you can't get some type of little rebound here in the cattle market, you're going to continue to see it slide lower next week.
All right. And of course, with a lower corn market, I assume that probably is always going to offer some support to the feeders, right?
Correct, right.
Oh, okay. Let's take a look here at the prices. We'll take a closer look now on the live cattle futures board. Let's go to Chicago, and we have the December contract down 13 cents right now at 118.92, and you have your February down 46 at 125.02 per hundredweight, and April down 45 cents at 125.50. So those are your current trades and kind of mirroring the average of what we've seen much of the day here so far. On the other hand, like we were talking about, we had the feeder cattle showing a little sign of strength today. And now January feeders are up 58 cents at 153.30, March up 43 at 151.58, and you have the April contract 48 higher at 151.40. We had some new box beef cutout values that came out at midday here, Scott, and I was looking at those, reading those off to the audience. That was kind of a shock here. We had choice cuts up $1.75 today, selects up $2, and yet we couldn't even get a flinch out of the live cattle trade when those numbers came out.
Yeah, right. And that's a weird thing. I mean, some of these fundamentals are changing, but the market's just not reacting to it. So it might be due just to the holiday that there's not a lot of people pushing it around. I mean, the volume is a little bit lighter today, but, see how it comes back in on Monday.
Okay, on the pork carcass cutout values that came out, or the primal cuts that we track here, we had a higher carcass value today, not by a lot. It was up by about 19 cents. It was priced at $82.17. Loin market did gain over $2.50 this morning. The ham market up a little over $0.50. The belly market just a touch weaker. But if you look at the lean hog futures here on the big board, we have the December contract currently quoted at $63.30. We're still up 48 cents on the day. February 42 higher at $69.52. Considering the journey that this hog market has been on this past week, how would you rate their action?
Well, yeah, the hog market it's firming up for sure. Earlier in the week, they expected the weights to come in a little bit higher. That would have a bearish tone, but the weights, they weren't as bearish as they thought. So, I mean, you did see that in the recent few days here. So, you're seeing some fresh buying in the hogs for sure, especially today.
All right. Well, thanks for all the input on the markets. Good to visit with you again, Scott. If you don't mind, we'll talk on the evening news as well. Scott Gecas happens to be with Longleaf Trading. He is based right there in Chicago. So hogs still holding their own and still a split decision on the cattle market today.
All right. Thank you so much, Markets Editor Marlon Bowling.